Something really interesting is happening in the gold market. There's this private crypto company, and it's quietly become one of the biggest gold buyers on the entire planet. Yeah, a mysterious new force is shaking up this ancient market. But here's the thing. The real story, the one that actually matters, it might be something else entirely.
So it begs the question, right? Who is this new whale that's making such big waves in the gold market?
And hint, it's probably not who you're thinking of. We're not talking about a central bank or some huge sovereign wealth fund. Nope. The answer? Well, it's probably going to surprise you.
Okay, so the new player on the block is Tether. Yep, a private crypto company. And its arrival is seriously reshaping the gold market. And get this, it's happening at the exact moment the entire world's financial order is being rewritten.
Now, for anyone who's not deep in the crypto world, Tether is the biggest issuer of what are called stablecoins. Just think of it like this. It's a digital token that's supposed to always be worth $1. And it's backed by a big pile of assets. And now, a really significant chunk of that pile is actual physical gold.
And we are talking about a staggering amount of gold here. The latest analysis suggests Tether is holding something like 116 tons. To give you some perspective, that's on the same level as what some smaller central banks hold. That's a lot.
Okay, let's put this into context, because this is important. In just the third quarter, Tether made up almost 2% of all global gold demand. So yeah, that's influential, for sure. But, and this is a big but, look at this chart. Their buying is still totally dwarfed by what the big sovereign institutions are doing. Just keep that image in your head as we go on.
And this really brings us to the heart of the conflict, doesn't it? What does it actually mean when gold, an asset that people value specifically for its simplicity and its independence, gets all tangled up with the super complex, synthetic world of digital finance?
I mean, look at this. You can see the contradiction right here. On one hand, Tether's whole promise is that it's modern, frictionless, digital. But on the other hand, the entire point of gold, its reality, is that it's independent, physical, and just simple. These are two worldviews just crashing into each other.
And well, this new buyer also comes with a bit of a history. Tether has actually settled with US regulators before after they admitted to making some, let's say, misleading statements about their reserves. For an asset like gold, which is prized for its transparency, that kind of opacity is pretty hard to just ignore.
So, this whole entanglement brings a whole new set of risks to the table. Think about it. If confidence in Tether suddenly drops, or if regulators decide to step in, they could be forced to sell a ton of gold to pay people back. This brings in exactly the kind of financial weakness and counterparty risk that gold investors are usually trying to run away from.
Which brings us to a really crucial question. We spent all this time talking about this new, flashy player in the market, but what if? What if Tether is just noise? What if it's a big distraction from the real signal?
Because when you look deeper, the real structural force, the true foundation holding up the gold market right now, it's not some private company. It's the strategic, quiet, and absolutely relentless buying from the world's central banks.
And the scale of this, it's truly historic. We're talking about central bank purchases hitting levels we have not seen since the early 1970s, right around when the last connections to the gold standard were cut. This isn't just a short-term trade. This is a massive strategic shift. So why? Why are they doing this now? Well, it's because the old rules of global finance are kind of breaking down. Trust is at a low point. Geopolitical lines are being completely redrawn. And what nations are realizing is that to be truly sovereign, you have to hold reserves that nobody else can control. They're learning the hard way that you can't separate sovereignty from custody.
There's a term for this. Analysts call it inelastic demand. And what that really means is these big institutions aren't just gambling on the price going up. No, they have a strategic need for a specific amount of gold to basically rebuild their national balance sheets. So for them, if the price dips, that's not a problem. It's a buying opportunity.
Okay, so let's try to pull this all together. You've got these two big competing forces. So how do we separate what's just noise from the real signal? And, more importantly, what does any of this mean for you?
This table lays it out pretty clearly. You've got Tether on one side, that's the noise. Their buying is all about expanding their private balance sheet, and they're thinking in terms of months or quarters. It complicates the short-term picture. But then you have the central banks, that's the signal. They're driven by huge geopolitical strategy, and they're thinking in terms of decades. They are defining the long-term path of this market.
And really, this gets to the very heart of what gold is. Its biggest strength, its enduring power, is its simplicity. It's not trying to be some fancy, complex financial product. It's just a rock. It's inert. It doesn't pay you a yield, and it makes zero promises. And that total lack of complexity is exactly why it has outlasted every single unstable monetary experiment for the last 5,000 years.
So here's the key takeaway for anyone who wants the kind of protection gold can offer. You have to focus on the form of ownership. It's not just about owning gold. It's about how you own it. The strongest way, the path to real monetary independence, is having fully allocated, segregated gold held under clear legal title in your name. That's what shields you from the weaknesses of any middleman. Doesn't matter if it's a bank or a crypto company.
So I'll leave you with a final thought to chew on. In a world that is just full of complex digital promises and layer after layer of financial engineering, what is the true value of holding something that is simple, physical, and 100% yours? If you found this explainer helpful, please subscribe and like it. See you next time.